Looking for some serious passive income? Want to collect market-smashing dividends that are also safe and growing? Wondering if there are any higher yielding stocks out there worth buying today? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. We're in a low rate world. Interest rates everywhere you look are extremely low. The S&P 500, the equity benchmark representation of the US economy, is yielding less than 1.5%. Tough to live off of passive income when you're getting a yield like that. However, there are many individual stocks out there that offer yields much higher than this. And I'm not talking about low quality junk stocks either. I'm talking about high quality dividend growth stocks. These stocks represent equity in world-class enterprises that are producing reliable rising profits. And those reliable rising profits translate to reliable rising dividends. You want your passive income to be as reliable as your bills are, but you also want it to be large enough to live off of. That's what today's video is all about. I'm gonna tell you about 3 high quality dividend growth stocks yielding more than 4% right now. All 3 of these stocks are, in my opinion, worth buying today. Ready? Let's dig in. The first stock I want to tell you about is Abv Inc, stock ticker ABBV. Abbvie is a global pharmaceutical company. This is one of my favorite dividend growth stocks. It gives you almost everything you'd want. You want quality? Check. You want growth? Check. You want yield? Check. Speaking of yield, this stock yields a mouth-watering 4.6% right now. Plus, it's not just yield. The 5-year dividend growth rate is an incredible 18.5%. You also don't have to sacrifice quality with this name, whereas stocks with sky-high yields of 10% or so are almost always total junk that'll give you terrible long-term total returns. Abbvie is a world-class enterprise that practically prints money by selling the medicine millions of people demand and require. The company produced more than $16 billion in free cash flow last year. Net margin is routinely well into the double digits. This stock also gives you some value to go along with that juicy yield. It's only trading for a price to cash flow ratio of 10.6. That's way lower than the broader market. It's also lower than the stock's own 5-year average. The 4.6% yield, by the way, is 70 basis points higher than the stock's own 5-year average yield. We put out a video back in November highlighting just how attractive this stock was at $85 a share. It remains relatively appealing even after a run up to $113 per share. The second stock, let's talk about Realty Income Corp, stock ticker O. Realty Income is a real estate juggernaut that owns over 6,000 properties. Want to be a real estate magnate without doing any of the hard work? Realty Income is your huckleberry. This stock gives you the opportunity to immediately own a slice of thousands of commercial properties rented out to quality tenants without doing any of the associated legwork. Plus, the yield is very attractive. The stock yields 4.1%, and that dividend is paid monthly. It's almost like collecting a monthly rent check. Could you get a higher yield by assembling your own portfolio of properties over many years? Maybe, but who wants to do all that hard work? Not me. I'd rather sit back and collect a big, safe monthly dividend that rolls in like clockwork. Indeed, Realty Income has never missed a dividend payment since their 1994 IPO, and they've increased their dividend for 94 consecutive quarters with a 10-year dividend growth rate of 4.9%. How's that for reliability and quality? This is another high-quality dividend growth stock available for a reasonable valuation. We put out a video back in March analyzing and valuing this stock when it was $63 a share. Our valuation estimate came in at almost $66 a share. So it's not super cheap right now with the stock trading hands for around $68 a share. It's also not super expensive, basically right around fair value. And as Warren Buffett would tell you, You could do a lot worse than paying a fair price for a wonderful business. Besides, this is a stock that's doubled over the last decade, and it could do that yet again over the next decade. The third stock I want to highlight is Verizon Communications Inc, stock ticker VZ. Verizon is a telecommunications giant. People can't live without their smartphones, and those smartphones don't work without a network connection, a network like the one Verizon owns and operates. With the oncoming 5G revolution, networks like Verizon's are set to become even more integral to everyday life. While you wait for that revolution to play out, the stock pays out a big dividend. The stock yields a very nice 4.4%. Verizon has increased its dividend for 16 consecutive years, so it's not just the 4.4% yield and that's it. It's the 4.4% yield and a growth kicker. Their 10-year dividend growth rate is 2.6%. Now, that's not dropping any jaws, but that's been enough to keep up with inflation. This is a steady Eddie business that rewards its shareholders with big dividends that slowly grow. And there's a lot to like about that. If you don't believe me, how about believing Warren Buffett? Buffett has been buying up Verizon stock hand over fist and now has $9 billion invested in the company. We put out a video only days ago discussing Buffett's aggressive move into Verizon. While you and I don't have billions of dollars to throw around, even hundreds or thousands of dollars in a name like Verizon can produce some serious passive dividend income. Plus, the stock isn't unreasonably valued. Buffett is famous for getting great deals on his stocks. Most basic valuation metrics for Verizon stock are slightly below or in line with respective recent historical averages. This stock is an inexpensive way to follow in Buffett's footsteps, get exposure to 5G, and collect big dividends. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these three stocks. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.